Welcome to Humble Loans Money Minute, where we provide money tips on how to get ahead and stay ahead of your mortgage. I'm Wayne Calvert, founder of Humble Loans, and this week's money tip is on how to beat interest rate rises. Well, there's two main strategies that I like to deploy with clients when we're looking at beating interest rate rises. And this week, I'm just going to touch on one of those. And that one strategy is rate reviews. Well, you'd be keen to know that most banks out there right now are actually making better margin or more profit of rising interest rates than when we were reducing interest rates. How does that work, you may ask? Well, it's simply like this. When interest rates go up, most of the banks here in Australia, 50% of their lending comes from overseas or securitized markets. The other 50% comes from savings, people who have money in the bank accounts or savings accounts. Now, it doesn't take a scientist to work out exactly where they're making the money. When they buy the securitized money overseas, that is automatically costing them more. Or if they're buying it off the Reserve Bank, it is costing them fundamentally more because the interest rates have gone up. But do you think that banks are passing on these interest rate rises to savings? They're not lifting up their savings deposits. They're keeping them quite low, which is maximizing their profit, because if they're giving 50% of their money from the savings who are not paying out any more interest to those clients, they're making a better margin. So the quickest and easiest strategy to deploy is a rate review, because right now there are a number of banks who are offering discounted rates or have not passed on the interest rate rise of 0.5% only to new business. Now, what that means is when you come to a broker like ourselves, we can actually find out exactly what you're paying, have a look at the lenders that are not passing on interest rate rises for new business only, and then look and see about refinancing into that lender. The reason why they do it for new business only is because of their cost of funding has not increased significantly due to what I just mentioned. However, it is for new business only. So if your bank is already doing that, and then you can't just refinance back into the same bank that you're with. They won't allow for that. So if that's something that you want to have a look at, a rate review is the best time to get ahead of the interest rate rises. You wouldn't believe on a daily basis how many people I see that are paying nearly 1% over what they could actually be achieving out there in the mortgage market. So if that's you, have a look at your rate right now. Call me on the phone number below or send an email to the email below, and I would love to do a rate review no matter where you are in Australia, because it's all by Zoom or face-to-face. It can all work. So I look forward to hearing from you. Get out there, have a look at your rates, and get ahead of the last interest rate rise. Thank you very much. I'll talk to you next week.